Tomorrow will mark Prime Minister Mark Carney's first budget since he took office. Let's take a look at what we can expect. We're joined by Mark Parsons, economic researcher at ATB Economics. Mark, thanks very much for joining us. What are the one or two big things that you're interested in with this budget?
Well, I think Mark Carney has to address problems that we had that predate Trump 2.0, which was our competitiveness and productivity challenges. So that's what I'm looking for. This is going to be a capital-focused budget. It's a budget that's going to be trying to bring back private investment that's desperately needed for the Canadian economy. And I think it's important to remember this is an issue that predates Trump 2.0. This is something the Canadian economy was struggling with before. It's just been made worse by the trade war. So that's what I expect to see in the budget, a very capital-intensive budget, and hopefully some measures that improve competitiveness.
And when you say capital intensive, major spending on infrastructure, for example?
That's right. So looking at things like improving trade corridors, ports, I don't expect to see anything specific on pipelines, but allusions to like whether that, some of those projects are going to be looked at in the future. Carbon capture here in Alberta, I think is going to be particularly important to watch. But anything that gets private investment back into Canada is going to be exceptionally important in tomorrow's budget.
I'm just trying to think. I mean, the two things are cutting tax, or two things are cutting taxes and cutting regulations, speeding up approvals. But those are two very tough things to do.
Yeah, I mean, we've heard already that the signals have been sent that we want to fast track major projects. We have the Major Projects Office. I think that's been more signals to date. We haven't seen much on execution. So that's what we absolutely need. So there's some execution risk. Like, can we actually deliver on these promises? I'll be watching that closely. On the tax side, I mean, there are some things that the country could do to compete with, Donald Trump's tax reform that he's extended through the one big beautiful budget bill, which is, the lower corporate tax rate and accelerated depreciation. So I'll be looking to whether some of those measures get extended in the federal budget tomorrow. Maybe we're going to allow for full write-down of capital. Maybe there's going to be some changes to the SR&ED tax credit and the patent box. So that's something that the Carney government has promised in the past was whether we get a patent box, which would really give a lower tax rate to income generated from patents.
Oh, that's interesting. Sorry, walk us through this patent thing again. What's the reform or the changes they might make there? Yeah,
so one of the issues in Canada is that there's been some concern that we reward companies for investing in research and development. So we have pretty generous tax credits for R&D. But then when you come up with something good and you commercialize it, those returns get taxed. So the fruits of your research get taxed at a higher rate, corporate tax rate. So the patent box would say, hey, if you come up with something good, if you generate a patent, you earn royalty income off that, that would be taxed at a lower rate. So it's really about rewarding the returns to research and development.
I know people like Jim Balsillie, the former Research in Motion head, have warned that Canada is just not taking intellectual property seriously. I mean, for example, we dished out billions to foreign battery makers, but they were foreign companies. They weren't Canadian companies that were going to keep the value of the innovation here.
Yeah, and I think what's really important is we need startups, we need small businesses, but we need them to grow. And I think one of the challenges we've had in Canada is, yes, we have the startups, we come up with the good ideas, but those ideas get commercialized in other markets like the US. And that's part of the productivity problem we have in Canada. It's not just building big projects, that's part of it. But we need companies that scale in Canada so we get the rewards through higher productivity.
We have a chart that shows the federal government's latest, and you reproduced it in your report. So the white line there is the federal government's deficit forecast from late last year, but the Parliamentary Budget Office is far less optimistic. It's the blue line. And of course, the deficit gets bigger as you go down the vertical scale there.
Yeah, and actually, I think that those numbers are going to be even worse. The PBO, what they factored in was anything that had been announced and, the new economic outlook with the trade war. But they, for example, haven't factored in the 5% military spending target, the GDP. So I expect that deficit number to be higher, potentially, the 80 billion or $90 billion mark. We'll find out tomorrow. And the other interesting thing is, how the government classifies operating and capital spending. They're promising to balance the operating budget in a few years, but of course they're not promising to balance the overall budget anytime soon. And
the distinction between operating and capital, it's got to be a bit blurred. I'm sure there's room for moving pots of money around there.
Yeah, that's not easy to do. And one of the things you have to look at is, for example, like tax credits that support private investment. Do you put that in operating or capital? I mean, they might argue it should go in capital because it's encouraging private investment. But how do you know if those tax credits are actually going to deliver on private investment? So this is where it gets a bit fuzzy as to whether, how you classified operating and capital. What's going to be really important is that we are very clear on what the overall deficit is. Not just operating, not just capital, because you can kind of play around with those categories. You want to know what the overall deficit is going to be. So I'm going to be looking for that.
And one thing, Mark, we're tight for time, but as an economist, I don't hear that much talk about human capital, and that's the real wealth of this country, or any country.
Yeah.
For example, should any Canadian young person leave school at 17? Shouldn't they all do some kind of third level, for example?
Yeah, and you know what? That's absolutely right. One of the challenges, if we're going to build big things, we need the people to build them. And we need to invest in trades, in construction trades. We need to get people working in the professions that are in high demand. And that means improving the immigration system so that's smarter, that we bring in people that can actively participate in the labor market. So I think we're going to see something tomorrow on immigration policy and hopefully something on investing in the trades and get people to work.
Mark, thank you very much indeed.
Thank you so much.
Mark Parsons, economic researcher at ATB Economics.